Hello there, BoBO, the Bitcoiner is back. Today's subject is quite interesting. Bitcoin 5% problem. So what is 5% problem? A simple question posted on Reddit and online forum recently generated a lot of meaningful discussion, exposing the fundamental tensions in the crypto space. The question is, if only 5% of the population owns Bitcoin, what is the use case? It followed up with, so if 19 million Bitcoin are already minted, yet only 5% of the population are holders, what good is a currency that only 5% of the population owns? The answer, after analyzing, may surprise us all. Bitcoin is succeeding precisely because Bitcoin failed as a cryptocurrency. This simple question cuts deep into the hearts of Bitcoin identity moment of truth. The debate split into two camps, each with a fundamentally different version of what Bitcoin should be. The electronic cash Purists points to Satoshi Nakamoto's original white paper titled Bitcoin, a peer-to-peer electronic cash system. He put it that Bitcoin is explicitly designed to function as a peer-to-peer electronic cash. But the digital gold advocates argue that the Bitcoin has evolved beyond its original purpose. Bitcoin is not a currency, wrote one user. It is not designed to be used as a payment vehicle. It is designed to be a safe haven for your money while the government ruins your fiat. This isn't just an academic debate. It reveals a profound shift in how Bitcoin is being used or being positioned and used in a real world. The most compelling counter-argument to the 5% problem comes from the unexpected source, gold. What percentage of the world population owns gold? People ask. Gold isn't widely used for daily transaction, yet it maintains a value as a store of wealth. Similarly, Bitcoin supporters argue that widespread ownership isn't necessary for utility. I don't own gold so that I can go take it to the Walmart to buy a TV, one user explained. I own gold because its supply cannot be inflated irresponsibly, like the currency. Therefore, like gold, its value will increase. But critics push back on the analogy. Gold has industrial uses, cultural significance, and thousands of years of history. But a research on AI acknowledged that only 1 to 5% of the population own gold as investment in gold bar, coins, or ETFs. It includes jewelry, electronic, industrial uses, accessories, AI accredited to 15 to 20%. Perhaps the most telling response to the adoption question was the collective refrain. It is a fundamental belief that Bitcoin adoption follows different trajectory than the traditional currency or payment system. Adoption isn't linear, it's exponential. One commentator declared, "We are early, and as always, early means confusing until it is obvious." So the early narrative draws parallel to the internet adoption curve, credit card acceptance, or even gold. Gold is historical role. Supporters argue that Bitcoin's current 5% ownership is actually impressive for a 16 years old technology, challenging the millennia-old monetary system. The most damning criticism came from users who see Bitcoin as a pure speculation. Bitcoin, like all currency, is best understood as a collective asset, wrote one skeptic. Its value is not tied to any underlying cash flow. What gives its value is belief and shared conviction that it's a scarce, desirable, and that someone else in the future will likely pay more for it. A greater fool's theory, he said. Even some Bitcoin supporters acknowledge this tension. I still have not met or see anyone pay with Bitcoin. It's always from an investment perspective, one user admitted. That's true, but then why would anyone spend Bitcoin when the price is going up every year? You don't want to buy a coffee with Bitcoin. The Reddit debates reveals 3 key insights for anyone considering Bitcoin. 1. Bitcoin's value proposition is revolving. Whether you see this as a natural evaluation or a betrayal of Bitcoin's original vision depends on your perspective. But the market has clearly spoken, right? Bitcoin's store value narrative has driven more adoption than its payment utility. Second one, the 5% problem might be the point. If Bitcoin succeeds as digital gold, it doesn't need universal adoption. Gold's monetary role historically came from scarcity, not ubiquity. The same logic could apply to Bitcoin. And the third one is the speculation versus the utility rebate isn't settled. Right? Bitcoin futures depend on whether it can develop genuine utilities beyond speculation. The next few years will determine whether Bitcoin becomes a lasting store of value or just an expensive lesson in collective delusion. Actually, the 5% problem isn't a problem. It's a feature. Bitcoin limited adoption might be exactly what gives it value in the world of infinite money printing. But that doesn't mean Bitcoin is risk-free. As one commentator noted, its value is 95% speculation, so 5% adoption seems about right. For investors, the question isn't whether Bitcoin will achieve universal adoption as a currency. The question is whether 5% of the population believing in Bitcoin's scarcity narrative is enough to sustain and grow its value over time. the Reddit debate suggests that for now, the answer is yes. Whether that remains true as a central bank developed digital currency and traditional finance system, that remains to be seen. For me, the answer is simple. Right now, Bitcoin is saving. For the past decade, it appreciates every year at around 60% on average. Isn't that the best saving? Whether it leads to currency exchange or investment, the future will tell. But for sure, right now, it's not a speculation, since for 10 years plus, saving goes up every year. Of course, when adoption reaches 20 to 30%, by that time, it could or would be a currency of medium exchange, and that people would use every day. But to buy a coffee in Satoshi unit. Isn't it interesting? Thanks for watching. See you next time. Bye bye.